Good morning and welcome to the ADS Securities Markets Update. The first trading day of the week came in with notable volatility, leading to another leg lower in global equities, including Asia, Europe and also in the US on fears of a Greek default. Despite the continuous bad news from Greece yesterday, including the rumors that Greece will not pay the IMF, in addition to the credit downgrade or the credit rating downgrade by the S&P credit rating, the euro remained very strong and filled the gap yesterday and advanced to as high as 1.1241. And this is also due to many factors. First of all, the inverse correlation between the equities or between the global equities and especially the European equities and the euro is very strong at the moment. And as the euro is also considered as a funding currency for equities. The US economic releases came in yesterday less than expected, and finally falling 10-year yields in Germany, the 10-year yields in Germany fell by 12.7 basis points closed today below around 0.793% so far. In the US, the pending home sales basically increased less than expected, rising by 0.9% in May, while estimates were to rise by 1%. And moreover, April's reading has been revised lower toward 2.7% instead of a rise of 3.4%. And moreover, the year-over-year pending home sales slowed down sharply toward 8.3%, down from 12.6% during the same period, which is also the lowest since January. Finally, the Philadelphia Fed manufacturing activity index also remained within a negative territory, declining toward -7 in June compared to -20 in May, while the estimates again were to decline toward -16, and this is the sixth negative readings in a row, which is not seen since the crisis in 2008-2009. During the Asian session today, few economic figures were released from New Zealand and Japan, which had also a notable impact on the market. Beginning with New Zealand, the building permits came in unchanged in May after declining by 0.9% in April, and this is also revised from a -1.7%. The ANZ Business Confidence Index also in New Zealand had a sharp decline again toward -2.3 in June after rising toward 15.7% in May, which is the first and the biggest monthly decline since 2011. In Japan, the average cash earnings slowed down also again towards 0.6% in May, down from 0.7%, while the estimates were to remain stable. But the most important thing here is that the real cash earnings also slowed down again toward unexpectedly decline by 0.1% compared to another decline of the same rate during the same period. But this is despite the fact that estimates were to rise or to post the first positive reading since 2013. Finally, the housing starts also increased by less than expected, rising by 5.8% in May compared to a rise of 0.4% in April, while estimates were to rise by 6.2%. As for the European session ahead, there are many economic figures will be released during the session across the euro area, which is likely to have a major impact on the market. However, Greece will remain under the spotlight today, and the economic releases effect might be only short-lived. Beginning with Germany today, or the list of the economic releases today, beginning with Germany, we'll be waiting for the retail sales, which is set to remain unchanged or 0% in May compared to 1.7% of a rise of 1.7 in April. The unemployment change also is expected to decline by 5,000 in June compared to a decline of 6,000 in May. But in the UK here, we have two economic releases during the day. We have the current account deficit and also the GDP, or the final reading of GDP for Q1. The current account deficit is expected to narrow slightly toward a 23.7 billion, down from a 25.3 billion pounds. This is between Q1 and Q4 of last year, which would be also the lowest level since Q1 of last year. The final GDP reading also for the first quarter is expected to tick higher slightly towards 0.4, up from 0.3. In the Eurozone, we'll be waiting for the inflation data today, or the flash inflation data. The core CPI is expected to rise again towards 0.8%, to slow down towards 0.8%, down from 0.9 for the month of May and in June, while the CPI may also slow down by 0.2%, down from 0.3% during the same period. However, this would be the second monthly increase in a row, also after 5 months of consecutive declines. Finally, the unemployment rate also in Italy and the Eurozone is expected, first of all, in the Euro area is expected to remain unchanged at 11.1%, and the monthly Italian unemployment rate is expected to rise slightly toward 12.5, up from 12.4%. As for the US session today, there are also 4 economic releases across the session from the US and Canada, which is likely also to have another major impact on the market. Beginning with Canada, we'll be waiting for the month-over-month or monthly GDP numbers, which is expected to rise again or to grow by 0.1% in April after shrinking by 0.2% in March. In the US, we'll be waiting for 3 economic releases, including the Chicago PMI, which also may recover above the 50-key level at 50.2 in June, up from 46 or after shrinking toward 46.2 in May. The CB Consumer Confidence Index is also expected to rise after the University of Michigan recovery, rising toward 97.1 in June compared to a 95.4 in May, which would be also the highest in 3 months. Finally, the S&P CS Composite 20, or the Composite Index, House Price Index for the Composite 20 cities, is also set to rise again toward 5.3% in April compared to 5% in March. Today is the end of June, and traders need to watch out from the end of the month flows, in addition to the rumors, statements, and also remarks toward Greece as it may default on the IMF payments today. Despite that, and as we noted in our previous report yesterday, falling equities with falling yields, especially the German yields, and also the falling DAX, is likely to keep the euro stable, if not higher. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.